Hello, I'm Stewart Heath, CEO of Harvard Grace Corporation, where we bring executive leadership tailored to your organization. In this week's tax segment, there's not a lot of new tax developments that can be discussed in a couple of minutes. There are always tax developments, but I thought I would just cover common mistakes made by many small businesses in their tax planning, because I realized that a week from today is when our 2020 personal income tax returns are due. But if you haven't already started your tax planning for 2021, you are behind. So you always got to be thinking about this, as well as all the other things you got to be thinking about that have to do with running your business. So I've attached an article here with a lot of common mistakes. I'll just highlight a few of them. And one of them, the top one, is actually misreporting your income. They actually list misreporting, failing to report, and overreporting, but I think misreporting actually captures it all. And when it comes to misreporting your income, now assuming you're not just engaging in tax avoidance from the get-go, you can misreport your income by not following a proper cash or accrual method, or not being consistent with that. Or you might actually just misreport it by, because every cash receipt that you get is not necessarily income. I actually find people over-report income more often than not, and it's just due to some basically bad accounting practices. Couple of other things. Mixing personal and business finances. This is very, very common among small business owners. Again, proper accounting practices: set up separate credit cards. Use one credit card for personal, use one credit card for business. Don't ever mix those. If you need money out of your business, well, there's absolutely nothing wrong with that. Write yourself a check and put it into your personal checking account. And deal with that. Don't pay your mortgage out of your business account, and so forth and so on. Small businesses fail to keep a proper mileage record especially for vehicles that are used both personally and for business. That's a requirement. You got to do that. It's one of the first things the auditors ask when they come knocking on the door. A lot of people think that taking the home office deduction is a red flag. It is not. There are rules to be followed, and that you can benefit from it on your tax return if you do that. A lot of small businesses aren't utilizing retirement plans. Many of them think they can't afford it. I think that you can afford it a lot sooner than you are thinking about, than you think you probably can. Here's a long-term one that small businesses is keeping proper basis records. When you own an asset, you're not thinking about selling that asset. When you're building your company's stock, and let's say you're a pass-through company, you're a partnership or an S corporation, you're not. They fail to keep really good records as to how much money you've actually put into the business and what your business is. And these are things that won't come to haunt you until 10 or 20 years down the road. But as business people, we're supposed to be thinking that far ahead. Anyway, there's many more of these things on the list. Take a read. It's a good read. It should get you thinking, and we'd love to help think with you. So reach out and give us a holler, and we will talk to you soon. Thanks.